Welcome to TradeTheMBI.com. This is John. This report is for the 22nd September. Welcome to fall, and well, we're not falling at this particular point. The Fed did what, well, I've been talking about forever, and they're not going to do anything. And anyone who thought they might, I don't know what they were thinking. There's no reason for them to make any adjustment prior to the election. However, what we've been looking for is sinking of the markets here, and what we have still is the ES below the midline point here of the peak. We're going to see that the NASDAQ is above that. The question was whether or not the Dow would be able to catch up. We saw the first inklings of the turnaround as we dipped here below the steel, the orange right here. So we had the steel moving up, orange goes below, and then as soon as we had a turn right there, was yesterday at 2130 was the signal for a long buy based on all of the readings, and isn't that interesting how well that worked? Go figure. Now see, look at this, the NQ. Now there's the same baseline, and we're above it. So we flip ourselves over to the Dow, and Dow's looking remarkably closer to the ES now. So trying to catch up, just a little bit behind, but overall, exact same signal. Configuration there with the dip of the orange, then the steel coming back below the 7.5 range, and then the takeoff. And so everyone's going to equate it to the Fed, but it is amazing how that worked out so perfectly within the construct that we look for. Euro dipped back to the lows, right back into the same center section, nothing changing there. That's a nice support for bonds because at least it says, hey, we're not going to have a devaluation further, so I don't think this is still not showing that it's got much jump to it yet. So it could, but doesn't look like it with those readings at this particular point. And gold making a nice turnaround buy cross from there, and the shorts just fading out of it completely. So it's an interesting little juxtaposition right there with that. Continuation, this is what I've been talking about. You've got to see oil moving in order to justify any kind of suggestion that there's global growth. Interestingly enough, though, if there is global growth, the pressure for the Fed to raise rates should be significant coming into post-election time period. So that's something to keep an eye on. That's why I like to look at oil, and I always think you should check it because that very situation is a precursor to what we would expect for the market. And, you know, as I've been saying, still focused in our minds towards that 2300 range, which is still another 140 some points at this particular point away. All in all, it's on track. I mean, I said there was going to be volatility ranges. As Hillary suffered, there was going to be a drop in the market. Now things appear to have stabilized, so the market has stabilized and turned around as well. And obviously, there's going to be a big lead up to debates coming forward. So there was our case chart here, and it stayed green within this configuration because we had some weak short activity within the overall setup, and so it just stayed pretty much range bound. And then we had this last dip below the red right here. Still came across and just took off from that point. From the ES5K, we had a couple of buy signals that came in. This was an interesting one because we had the peak come up, it moved below, but at that point it was problematic because the shakeout. I'm trying to move the shakeout. What I wanted to show was these lines right here. Get rid of it there. No. So right here at the end of it, the shakeout reading at this particular point is below the yellow line and happens to stay that way and doesn't move up until right here. And we're still below the 7.5 at that point. So the buy turned around all the way over to this point before it converted. And then we ended up with a brief short setup right here. DT, boom, came back. That was this right here. If you look at that, this is a tough one. 399 on the cyan. I've given 4 as the threshold. Yeah, exactly. It's always going to be those kind of subtleties that can be missed. And it wasn't much of a drop, which is an indication of why that fourth threshold tends to be more powerful. It didn't really dip enough to do anything. But then we ended up with the steel box, which the steel box, the only difference is instead of moving above 13.5, it only gets to right around that 7 range. Let's see what the exact number was right here. The peak 591. So it's just right around the 6, which meant it was likely to be a weak maneuver and would have been fine, except for the fact that the cyan immediately dipped below the red line at that point, which is indicated by this break point right here, and rising shakeout. So at that particular point, anywhere along any of these would have been an indication as long as that cyan was under red, and it remains just like that to this point. We're getting really up there. We've now finally had a bunch of overbought through all of this run, so we might see some retrace back to the mean. Not surprising. Probably not this one. Usually it's the one after that breakout below in the 45 range. Would be a full retrace. But there's plenty of other spotty positive extremes throughout that. But as long as you've got that cyan under the red line, nothing to fret. Piece of cake. I will be traveling tomorrow. I'm going to see a friend in Vegas. No, don't confuse that with me going to the iHeartRadio concert. Wouldn't dream of it. But I will be taking a flight in the morning, and then I will be there through the weekend into Monday. But still be doing your reports. So I am mobile with dedicated server capabilities. So no disruption other than I won't be on the Skype chat tomorrow. But as always, though, trade well, and I will, if I can pop in, I might be able to. Depends on how early I get my Wi-Fi connection when I'm there. If I can, I will pop in before market close because I'm hoping to have an early flight, but one never knows. As always, though, trade well.